Good evening. This is Dale Wetzel. We are coming to you from the Peacock Alley American Bar and Grill in downtown Bismarck, North Dakota. This is the Legislature Today radio program. In a moment, we'll be talking to the president of the nation's only state-owned bank, the Bank of North Dakota, on the banks of the Missouri River in Bismarck. We'll be speaking to Eric Hardmeyer, who is the president of the state-owned Bank of North Dakota. In the meantime, I'm here with my co-host, Scott Hennon, and we are looking out upon the very vibrant Peacock Alley American Bar and Grill, watching people have their martinis. Why do you think it is that they're having martinis, Scott?
They're very good.
Well, that's one reason.
Yes, they're quite tasty.
That's probably the best reason. But they're also, I understand, they're on special.
They are. So it's a twofer, right? You have great tasting martinis, and they're specially priced 2 for 1 on Teeny Tuesday at the Peacock Alley. Also, all their appetizers until 10 tonight are $2 off too, and they're great appetizers. Really good appetizers.
Some of these martinis are quite colorful too. I mean, I'm not. You know, the first time I saw a martini was in a James Bond film, and I'm not used to exotic stuff like chocolate martinis and.
What's in a martini?
I know that's
gin, right?
Gin or vodka, and whichever it is depends on your personal experience.
No scotch. That's probably why you're not a real big fan.
Yeah. There are no scotch martinis to my knowledge.
Yeah. Anyway, they're a good deal. Teeny Tuesday, come on down tonight, and of course tomorrow night, Wine Down Wednesday, half-price bottles of wine. Political wing night, right wings versus left wings on Thursday night, but not everybody can agree what's the best, but they can agree that they're all good. And priced right, 10 fresh chicken wings for $5. So there's always good specials. We're here Monday through Thursday night at the Peacock Alley. I want to welcome 2 new sponsors, by the way, to the Legislature Today program, including the North Dakota Pharmacists Association and the Independent Water Providers as well. 2 new sponsors in addition to the others that you heard at the beginning of the program. Our hospitality sponsor is the Expressway Inn and Suites, where a good night's rest costs less, as well as, of course, the home for the Legislature Today, the Peacock Alley Grill and Bar, which is in the historic Patterson Building, downtown Bismarck at 422 East Main Avenue. So what happened in the Legislature today? Busy day again, right?
Oh, it's always busy in the Legislature when you've got 80 days to do 2 years' worth of work. So basically what most of the time was spent today, my time was spent today going to legislative hearings about water and about guns and about property taxes. There's legislation to make it possible to carry a gun in school if you have a certain type of permit, and also if you can carry a gun in a church if you have a certain type of permit, and also in both of these cases you would need permission from the school board and also from the church governing board if that's whoever it is, or the head honcho at the church would have to give permission for you to carry a gun legally in church. And frankly, there's quite a bit of opposition to some of these bills.
Would that be the pastor when you say head honcho?
Yes, the pastor, I was thinking of the church board, actually, the church president. I don't think of the word honcho when I think of the word pastor, but
top dogs, the governing
governing board of the church.
I'm trying to think of what that term is. There's a term for that, right? Sometimes it's the elders,
the elders, the church
parish council,
the council, the church board.
Head honchos works actually.
It does. Yeah. But there's a number of bills today about concealed carry guns and where you can carry a gun, under what circumstances, what kind of permit you need. There were a lot of law enforcement people in the Capitol today talking about how they didn't like these bills, and we'll see if any of them sees the light of day at the end of the day. And there's also a number of bills to limit property taxes, whether it's limiting the property tax rate that can be charged or the amount of money that a local government can collect from year to year on their property taxes. One of the proposed solutions to property tax growth in North Dakota is to essentially cap the amount of income in dollars that a local government can get from property taxes, excluding new development and new property value, because people do get frustrated when they hear the talk in the legislature about how we're going to give property tax relief and we're spending millions on property tax relief. And if a taxpayer gets his or her property tax bill that next year and it's greater than it was the year before, they think, what's the deal? I've been hearing these politicians talk about property tax relief, and it sounds like it's all a bunch of hot gas if my property tax bill is still bigger than it was the year before. And the legislators hear these concerns, and frankly, they sympathize with them, and so they're trying to figure out the way to reverse the growth or slow the growth. And at the same time, there's more state money, more taxpayer money being sent to local governments, school districts, city governments, etc., to try to reduce the pressure on them to raise property taxes to provide the services that they need to provide. What we're here to speak about with Mr. Hardmeyer is one of the bills that did get a hearing today. It's a Bank of North Dakota residential mortgage loan program. And this is something that was instituted 2 years ago, and it was instituted at the behest of the two major banking groups in North Dakota, the Independent Bankers Association and the North Dakota Bankers Association. And we need to have Mr. Hardmeyer just explain to us, please, why is it that these two banking groups came to you and said, will you please help us with the home mortgage loan business?
Sure. Good to be with you, Dale.
Thank you. So good to be with you.
Good to be with you. Well, of course, the reason that they came to us is that, since the financial crisis of 2007, it's just become immeasurably more difficult for banks to make mortgages, particularly the small rural community banks who struggle with the increasing costs of regulatory burden, compliance. They may do a handful of mortgages throughout the year, and to staff that position fully and pay for all the security and overhead with it has just become so onerous that the banks have a lot of the banks are considering getting out of the mortgage business, and that becomes a real problem when they can't serve their customer in the way that they would like to. So the independents and the North Dakota Bankers Association came to us about 2-3 years ago and said, Bank of North Dakota, is there a solution in here for you? Can you help us? And, of course, we're a bank with some size and capacity and some resources, and that's traditionally what we do anyway, is we work with the banks, we partner with them, and we put together a bill 2 years ago that would do that very same thing, where we would originate mortgages in rural North Dakota that were referred to us by a local bank. At the time, there was a little bit of a backlash. There was some concern by some that we were perhaps overstepping, our parameters of a state-owned bank, and that we were infringing on the private sector. I thought that was a bit ironic as I sat there with both the independents and the North Dakota Bankers Association. And what we ended up with was a pilot program that would allow us to do $8 million total over a 2-year period, and capped it at $200,000. So we went back in there this year and asked, basically, as one senator said, to take the training wheels off. And that's what we did today, and we were successful through the House IB&L. It had already passed the Senate. So we were, very fortunate to have some, good help with that bill.
How much how many mortgage loans have you made, and what is their size generally?
Well, they're capped at $200,000, so it can't exceed that. And what we were trying to accomplish is to work with the small rural banks. So, we ended up doing somewhere around $3 to $3.5 million in total. But what's really interesting about it is you look at where we did loans, how many banks were involved, and it's really quite interesting in that we virtually went through every corner of the state and made loans in all kinds of small communities with 18 different banks. So, we went from Selfridge to Bowman to Gwinner, all over the northeast, north central part of the state. So we felt that it was a good representation of where we would see credit. So we didn't reach the $8 million, but we were pleased at what we did, and knowing that our residential portfolio and individuals were, at the time, busy working the Rebuilders Home program up in Minot as well. So,
did you think that your showing was fairly respectable, given that this was a new program and it was it's a business the bank has really never been in, to my knowledge?
Yeah, we as I said, we were pleased with the results. We think that there's opportunities to grow with it, and we're mindful that we're staying away from the large pockets. The program is designed so that we meet the underserved needs of the state. So we're not going to go into Fargo, Grand Forks, Minot, Bismarck, Dickinson, Williston, or the other major cities, because there is a good network of banks that do business there. And that's not what we're trying to do.
And you did business with 18 different banks, and these banks all came to you, if I understand the program correctly?
That's right.
And how is it different? How is making a mortgage loan now different than it was before the financial crisis?
Well, as we talked about, the compliance around this, continues to grow. And so we're just starting now to see the effects of Dodd-Frank. And I could talk about QM and QRM and, what is a loan that can be sold on the secondary market. But it really has become very burdensome for banks to do it. And when you're only doing a handful a year, as I mentioned, it just doesn't pay. So the information that you have to fill out as a borrower is significant. You probably have seen that yourself. It's 2-3 inches thick of documents, and it's all there to protect the consumer. But most of the time, the consumer hasn't looked through all that information. It would be almost impossible to get through it.
Does the Bank of North Dakota hold these loans, these mortgage loans?
Yeah, that is the idea. Is that we will service and hold these in our portfolio. And, of course, the nice thing about it is that now everybody in rural communities can access, the market and get a market-driven rate. So the rates that we're going to offer are those that you would get anywhere throughout the country. They're very market-sensitive, and so, people in, in Mott and Elgin and Selfridge can all access, the market.
Could you try to quantify for us what has to be done now that didn't have to be done before? I mean, I'm coming in, I'm applying for a loan. You're a banker. You're trying to lend me money. What is it that has to be done now in terms of disclosure or regulation or complying with regulation or whatever that wasn't done before, and how does this affect the process? Does it lengthen it? Does it make it more frustrating? What are the effects?
Well, I think you've all realized after the 2007-2008 financial crisis, a lot of loans that were being made, they called them ninja loans with no income, no jobs, and so there really wasn't the oversight that there should have been. And whether the regulators weren't paying attention, probably a little bit of both. Borrowers, taking on debt that they couldn't pay. People, quite frankly, trying to build portfolios and flip them and make a lot of money. So, a lot of greed involved in the marketplace as well. So, I think what you saw as a result is that, the regulators came in and said, enough of that. We've put this country, the world, quite frankly, through a lot of fear and trepidation because of this financial crisis, all started by the housing industry. And so, really trying to, disclosures is the key word there, is making sure that, the underwriting was proper, the disclosures were there, you could verify income, you can verify the values, the appraised values. So a lot of the things were there already, but they felt that they needed to make this a little bit more rigorous.
And these sorts of practices, to your knowledge, when I say practices, I mean, giving someone a mortgage loan who has no income, no assets, and no job, and no documentation for that loan. These were not practices in North Dakota amongst the North Dakota banking community, were they?
No, absolutely not. And for the most part, that wasn't really practiced by the banking community at all. What you saw is a lot of the shadow industry, banking industry, the mortgage brokers. You could go any street corner and you could see a mortgage broker at the time. So, I think you'll hear from at some point the North Dakota bankers, they're fond of saying, nationwide, the banking community, 95% of all this was made outside of the banking industry. But in North Dakota, we know our customers. That was never a problem. And I don't think our bankers are those kinds that would, like to make a quick buck. And so they're a very good, traditional, conservative banker.
And to what extent is the Bank of North Dakota affected by federal regulations, the new ones?
Well, we are not regulated, as you may know, by FDIC or OCC. Our deposits are backed by the full faith and credit of the state of North Dakota. They're not insured by FDIC or OCC, so we are not regulated by any of those two federal regulators. Dodd-Frank was created in part to address the unregulated. So, there is going to be some of the regulatory compliance issues is going to filter down and impact us. But it is really one of the nice things is that as long as we continue to do things properly, we're going to have a degree of freedom and flexibility that, others don't.
What do you see the mortgage loan volume of the bank being in the next 2 years? I mean, this year I think you mentioned the figure $3 to $3.5 million in loan volume. How do you see that increasing?
Well, we continue to see, and that's the really nice thing about what's happening in North Dakota right now is, having been in this game now for 25, 30 years, watching, the repopulation of North Dakota, western North Dakota. So the small communities are filling back up, schools are filling back up. So, and that's across the state, frankly. So, we think that, we're going to, it's difficult to say, Dale, how big that will be. And as I said, we're trying to meet a certain niche. So, if we do 10, 15 million, 20 million a year, that would be a pretty good year for us.
Is the $200,000 cap still adequate when you're talking about, some fairly high income areas in North Dakota that are nonetheless underserved by mortgage lending?
No, it's not. In fact, that's one of the things that we got lifted today, and I guess we need to make sure that it goes all the way through the House before we can say that this was approved. But yeah, the 200,000 limit was put in place two years ago, and of course we've seen a lot of real estate appreciation, and 200,000 could have been one of those restricting factors on why we didn't see more as well.
To what extent, we talked about how the bank is a state-owned institution. Are you federally regulated at all? I mean, do federal regulations affect you at all?
Well, yes, certainly to a certain extent. So, as I said, the DFI comes in and examines us, but we also have a host of other entities that come in. HUD comes into the Bank of North Dakota because we have a FHA, VA mortgage portfolio. Department of Education comes into the bank and audits us because we're big players in the student loan industry. The Fed, we are beholden to the some of the Fed regulations because we're members of the Federal Reserve. So,
how would you describe the Bank of North Dakota's relationship with the private banking industry in North Dakota?
Strong, and it needs to be. That's really the only reason we exist, and a lot of people don't really understand this about the Bank of North Dakota, but truly what we are is a banker's bank. We exist to really help and support the banks out there. So in very few cases can you come directly to us. We are mostly accessed through the banking community. So any kind of program that we decide to put forward, we vet through both, the independents and the North Dakota Bankers Association and the credit unions. We want to make sure that, we do things in step with what their needs are.
You mentioned that you're a banker's bank. Does the Bank of North Dakota issue credit cards?
We do not.
Have you ever wanted to?
Never. Don't want to do that. There been a bill a few years ago for the Bank of North Dakota to get into the credit card business, and it's something that I don't think that we need to. That market is very well established, very mature. didn't really see a need for it, and you would have to market that nationwide for it to really work. And we just didn't see the need to do that.
Do you ever make any car loans?
We don't make any car loans. We don't make any consumer loans, except for, I guess you would say, our student loan program would perhaps qualify there.
Do you have an ATM machine?
We do not.
If I went into the Bank of North Dakota and said, Mr. Hardmeyer, I really would like to have a checking account at the Bank of North Dakota, what would you do?
We could do that for you.
And
you could get a checking account, savings account. We could, issue a CD. We can do those kind of basic transactions.
Is that something that you want?
No, not necessarily. We don't want to take deposits away from the private sector. Dale, of course, the other unique thing about the Bank of North Dakota, our funding source is unique. In that all of the state tax collections and fees that are collected funneled through the tax commissioner to the treasurer, and then by law, the treasurer has to deposit those funds at the bank. And so that forms the nucleus of our deposit base, and we really don't need, private deposits to augment that.
This mortgage loan bill that we've been talking about, what is its status right now?
Yeah, it has passed the Senate before crossover. Then it went and had its first hearing on the House today. It passed out of committee 14-0. So now one of the sponsors will take it and carry it to the floor, where it will be voted on by the full House.
Which committee handled this bill?
This was the House IB&L.
Industry, Business, and Labor.
Yeah,
and
right.
Was it amended?
No, it was not.
Okay, so basically the bill has not been amended. It's on its way to the House floor, and if the House passes it, it will go to the governor, and presumably the governor will sign it.
Yeah, I would think so. We of course, work very closely with the governor. He's, of course, the chairman of the Industrial Commission, and so before we put any bills together, we take them up to the Industrial Commission to get their blessing.
We've been speaking to the president of the Bank of North Dakota, Eric Hardmeyer. When we come back in a moment, we're going to be speaking to Mr. Hardmeyer about other issues of the Bank of North Dakota, including the banking industry in North Dakota is getting too much money, and we'll discuss just how that can happen to a bank and what to do about it.
A bill to them. And banks, we partner with them. We do anyway, is we work with and that's traditionally what opportunities to grow with it. So we think that there's opportunities with the result. As I said, we were pleased. We
knowledge. Really never been into something. It's a business. The bank is a program, and it was certainly respectable given that this was a new. Your showing was very.
So,
did you think that
program up in Minot as well? So, Rebuilders Home busy work in the at the time. And individuals were residential portfolio, or knowing that I raised at what we did, but we were pleased to reach the $8 million, we would see credit. So we did representation of where we felt that it was a good central part of the state. So we the northeast, all over to Gwinner, Bowman, Bridge to we went from Self and Bank. So 18 different small communities with kinds of and made loans in all corner of the state. And we virtually went through everything in that pay. So mentioned it just doesn't be doing a handful a year, as I meant, banks to do it. And when you're only for very burdensome, it really has become but it can be sold on the secondary market. What is a loan, and what is a QM and QRM. And I could talk about see the effects of Dodd-Frank. And so we're just starting now to grow. Continues to clients around this. As we talked about
before the financial crisis. Now different than it was. How's making a mortgage loan? How is it different? And how correctly?
That's right.
Came to you, if I understand the program. Different banks, and these banks you did business with 18 different.
Do.
And
that's not what we're trying. Work of banks that do business is a good net major cities, because there is Williston or the other Bismarck, Dickinson, Grand Forks, Minot. Not going to go into Fargo needs of the state. So we meet the underserved needs so that.
What has to be done now try to quantify for us.
The market.
Could you
can all access and Selfridge. and Mott and L people and and so very market sensitive throughout the country. There are those that you would get anywhere. The rates that we're going to offer are market-driven rates. So, the market and get a market can access everybody in rural community. About it is that now, of course, the nice thing, folio, and service and hold these in our portfolio. That we will. That is the idea. Is that
these mortgage loans. In North Dakota, hold these loans.
Possible to get through it.
Does the bank
would be almost through all that information. It's the time the consumer hasn't looked, but most all there to protect the consumer, and it's 2-3 inches thick of document. It's you probably have seen that yourself. Significant as a borrower is that you have to fill out the information that the program is designed pockets. We're staying away from the large, and we're mindful that involved, and it's really quite interesting. How many banks were in loans? Where we did interesting about it is you look at, but what's really $1.5 million in total, somewhere around 3 to 3. We ended up doing rural banks, so accomplished is to work with the small. We were trying to accomplish, and what exceed that 200,000. So it can't. They're capped at
their size generally. Made and what is have you? How many mortgage loans have you? How much?
Good help with that bill to have some. So we were very fortunate. Now it had already passed the Senate, rolled through the House IB. We were successful today, and that's what we did. And that's off. Said to take the training wheel. As one senator, basically this year, and we went back in there 1,000. So quite frankly, they couldn't pay. People, taking on debt, that borrowers, really a little bit of both. Probably there's, weren't paying attention. Whether the regulator and that there should have been oversight. There really wasn't the over and so with no income, no jobs,
and no document job, and no income, no assets, and no job. Someone a mortgage loan who has no, given. When I say practices, I mean to your knowledge, these sorts of practices, and
to make this a little bit more rigorous. Felt that they needed, but the things were there already. So a lot of values. The appraised, you can verify. You could verify income. The disclosures were there. The underwriting was proper. That the word there is making sure disclosures is the key to. Really trying industry, and so this all started by the housing nation because of this financial crisis of fear and trepidation. Quite frankly, through a lot of the world, we've put this country. Enough of that. The regulators came in and salt is that. I think what you saw as a result of the marketplace as well. So greed involved in them, a lot of money. So a lot of portfolios and flip them and trying to build portfolio. Are to pay FDIC or OCC, as you may know, by regulated. We are not.
The new ones, a federal regulation. North Dakota affected by. To what extent is the Bank of
Conservative banker and good traditional? They're a very and so they. Like to make a quick buck, and that would, I think our bankers are those kinds. And I don't think that was never a problem. Our customers, but in North Dakota, we know side of the banking industry. Percent of all this was made out. 95% the banking community nationwide fond of saying, North Dakota bankers. There, at some point, I think you'll hear from, a broker at the time. So you could see a mortgage. Street corner anchors, you can go any the mortgage broker, auto industry, banking industry. What you saw is a lot of the shed community at all, just by the banking. That wasn't really practical. Nice thing about what's happening. And continue to see, and that's the really nice. We can.
See that increasing the loan volume. How do you see the $3.5 million? I think you mentioned the figure 2 years. I mean, this year, volume of the bank being in the next. What do you see the mortgage loan volume? Do you see your
others don't ability, that degree of freedom and flexibility? We're going to have a need to do things properly. Is that as long as we continue, really one of the nice things, but it is impact us, filter down and inventory compliance issues is going to. some of the so there is going to be unregulated address created in part to Frank was Dodd regulators, those two federal by any. We are not regulated your OCC, so they're not insured by FDIC. Credit of the state of North Dakota, backed by the full faith and deposits are. It was put in place to the 200,000 limit. This was approved, but House before we can say that. Make sure that it goes all the way through the. Need to make today, and I guess one of the things that we got lifted. It's not. In fact, that's
mortgage lending.
No,
nonetheless underserved by those in North Dakota that are income areas. Some fairly high in when you're talking about cap still adequate. Is the $200,000 cap
a pretty good year for us? In $20 million a year, that would be 10, 15 million. If we do niche, so trying to meet a certain. And as I said, we're how big that will be. It's difficult to say, Dale. How, we're going to, we think that across the state, frankly. So we and that's up. Back up. Schools are filling back up. Are filling back. So the small communities of North Dakota, Western North, repopulation of the 30 years. Watch game now for 25. Having been in this North Dakota right now is, and for the most part, absolutely not. And
were they?
No.
Amongst the North Dakota banking community practices in North Dakota, these were not presentation for that loan.
They called them ninja loans that were being made, financial crisis. A lot of loans have in 2008, finance after the 2000s. You've all realized
the effects.
Well, I think is
frustrating. What are make it more for lengthen it? Does it Bank of North Dakota's relationship? How would you describe the
reserve? So, because we're members of the federal relations. Some of the Fed regulate. We are beholden to the Fed, big players in the student loan industry. Us because of and auditation comes into the bank, Department of Education mortgage portfolio because we have a FHA, the Bank of North Dakota, and HUD comes into their entities that come. We also have a host of other and examines us, but the DFI comes in. So as I said, yes, certainly to a certain extent. Well,
federal regulations affect you at all? Regulated at all? I mean, are you federally regulated on institution? We talked about how the bank is a state. To what extent?
As well, factors on why we didn't see more. It would have been one of those restricting factors. 200,000 appreciation and real estate appreciation, and of course we've seen a lot of 2 years ago, very mature. Very well established. That market is. I don't think that we need. It's something that card business and North Dakota to get into the credit for the bank. And been a bill a few years ago. Want to do that? We've been there. Never. Don't want.
Have you ever wanted to?
We do not.
Can North Dakota issue credit cards? That you're a banker's bank. Does the bank?
Their needs are.
You mentioned
step with what we do things ensure that. Credit unions. We want to make sure association and independence in the North Dakota bankers through both, we vet, decide to put forward kind of program that we so any kind, the banking community through, we are mostly accessed them directly to us. But in very few cases can you come banks out there. So help and support this to really help. We exist is a banker's Dakota, but truly what we are, understand this about the Bank of North, and a lot of people don't really. The only reason we exist in law, to the treasurer, and then by law, the tax commissioner funneled through the fees that are collected, the state tax collections, and that all of the is unique. Go to our funding source. The unique thing about the Bank of North Dakota. Dale, of course, the other way from the private sector. We don't want to take deposits. No, not necessarily.
Want? Is that something that you?
Those kind of basic transactions. CD, we can do the account. We could, issue. You could get a checking account. Say we could do that for you.
What would you do?
We could
a checking account at the Bank of North Dakota. Mr. Hardmeyer, I really would like to have North Dakota and said, if I went into the Bank of North ATM machine.
We do not perhaps qualify there.
Do you have an ATM
loan program I guess you would say our student loans, except our loans. We don't make any consumer. Don't make any car.
Never make any car loans.
The need to do that. We just didn't see nationwide for it to really work. And you would have to market that, and they didn't really see a need for it. Did we, of course, work very closely with? Yeah, I would think so. We
sign it. Governor, and presumably the governor will It will go to the floor, and if the House passes it amended, it's on its way to the House. Typically, the bill has not been.
No, it was not.
Okay, so basically, and it was it amended industry, business, and labor.
Yeah, the House IB&L.
This bill.
This was House.
Which committee handled?
Voted on by the floor, where it will be and carry it to the floor. Sponsors will take it. One of this thing. So now out of committee, 14-0 on the House today. It passed and it went and had its first hearing before crossover. Then passed the Senate. It has.
At us right now about what is its bill that we've been talking about? Mortgage loan. This
private deposits to augment. And we really don't need of our deposit base forms the nucleus of funds at the bank, and so that treasurer has to deposit the. That's really the. It needs to be strong and
industry in North Dakota. With the private bank. Does this affect the process? That wasn't done before, and how did whatever that complying with regulation or regulation or terms of disclosure now? Is it that has to be done? What is to lend me money? You're a banker. I'm applying for a loan. I'm coming in. I have to be done before.
Capped it at $200,000 2-year period, and over a $8 million total. And some resources with some size and capacity. We're a bank, and of course, for you, can you help us? A solution in here. Bank in North Dakota is there years ago and came to us about 2-3
banking groups came to you. Why is it that these two are the best reason? But
they're quite tasty.
That's probably that's one reason. Yeah. Scott.
They're very good.
Why do you think it is that they're having have their martinis? Why are watching people Cali American Bar and Vibrant Peacock upon the very VAR looking out of Scott Hennon, and we are with my co-host. In the meantime, I'm here with Bank of North Dakota, the president of the state, Eric Hardmeyer, who will be speaking to in Bismarck, with banks of the Missouri River, North Dakota, on the own bank, the Bank of.
We do anyway is we work with the banks, we partner with them, and we put together a bill to.
To a bank and what to do about it. Just how that can happen. We'll discuss too much money. And the industry in North Dakota is getting the banking. Including other issues of the Bank of North Dakota. Talking to Mr. Hardmeyer about it. We're going to be speaking when we come back in a moment. Eric Hardmeyer, president of the Bank of North Dakota. We've been speaking to the
commission to get their. We take them up to the industry. Any bills together before. We put the Industrial Commission, and so the chairman of the governor, he's, of course, we virtually went through every corner of the state and made loans in all, kinds of small communities with 18 different banks. So, we went from Selfridge to Bowman to Gwinner, all over the northeast, north central part of the state. So we felt that it was a good representation of where we would see credit. So we didn't reach the $8 million, but we were pleased at what we did, and knowing that our residential portfolio and individuals were, at the time, busy working the Rebuilders Home program up in Minot as well. So,
did you think that your showing was fairly respectable, given that this was a new program and it was something? It's a business the bank has really never been in, to my knowledge.
We as I said, we were pleased with the results. We think that there's opportunities to grow with it, and that's traditionally what we meet the underserved needs of the state. So we're not going to go into Fargo, Grand Forks, Minot, Bismarck, Dickinson, Williston, or the other major cities, because there is a good network of banks that do business there. That's not what we're trying to do.
And you did business with 18 different banks, and these banks all came to you, if I understand the program correctly?
That's right.
And how is it different? How is making a mortgage loan now different than it was before the financial crisis?
Well, as we talked about, the compliance around this, continues to grow. And so we're just starting now to see the effects of Dodd-Frank, and I could talk about QM and QRM and what is a loan that can be sold on the secondary market, but it really has become very burdensome for banks to do it. And when you're only doing a handful a year, as I mentioned, it just doesn't pay. So, and that the information that you have to fill out as a borrower is significant. You probably have seen that yourself. It's 2-3 inches thick of documents, and it's all there to protect the consumer, but most of the time the consumer hasn't looked through all that information. It would be almost impossible to get through it.
Does the Bank of North Dakota hold these loans, these mortgage loans?
Yeah, that is the idea, is that we will service and hold these in our portfolio. And, of course, the nice thing about it is that now everybody in rural communities can access the market and get a market-driven rate. So the rates that we're going to offer are those that you would get anywhere throughout the country. They're very market-sensitive, and so people in in Mott and Elgin and Selfridge can all access the market.
Could you try to quantify for us what has to be done now that did
designed so that and so there really wasn't the oversight that there should have been, and whether the regulators weren't paying attention, probably a little bit of both. Borrowers taking on debt that they couldn't pay, people quite frankly housing. So we went back in there this year and asked, basically, as one senator said, to take the training wheels off. And that's what we did today, and we were successful through the House IB&L. It had already passed the Senate. So we were, very fortunate to have some, good help with that bill.
How much how many mortgage loans have you made, and what is their size generally?
Well, they're capped at $200,000, so it can't exceed that. And what portfolios and flip them and make a lot of money. So a lot of greed involved in the marketplace as well. So I think what you saw as a result is that the regulators came in and said, enough of that. We've put this country, the world, quite frankly, through a lot of fear and trepidation because of this financial crisis, all started by the housing industry. And so, really trying to, disclosures is the key word there, is making sure that, the underwriting was proper, the disclosures were there, you could verify income, you can verify the values, the appraised values. So a lot of the things were there already, but they felt that they needed to make this a little bit more rigorous.
And these sorts of practices, to your knowledge, when I say practices, I mean, giving someone a mortgage loan who has no income, no assets, and no job, and no document.
With no income, no jobs, just by the banking community at all. What you saw is a lot of the shadow industry, banking industry, the mortgage brokers. You could go any street corner and you could see a mortgage broker at the time. So, I think you'll hear from, at some point, the North Dakota bankers. They're fond of saying, nationwide, the banking community, 95% of all this was made outside of the banking industry. But in North Dakota, we know our customers. That was never a problem. And I don't think our bankers are those kinds that would, like to make a quick buck. And so they're a very good, traditional, conservative banker.
And to what extent is the Bank of North Dakota affected by federal regulations, the new ones?
Well, we are not regulated, as you may know, by FDIC or OCC. our trying to build portfolio backed by the full faith and credit of the state of North Dakota. They're not insured by FDIC or OCC, so we are not regulated by any of those two federal regulators. Dodd-Frank was created in part to address the unregulated. So, there is going to be some of the regulatory compliance issues is going to filter down and impact us. But it is really one of the nice things is that as long as we continue to do things properly, we're going to have a degree of freedom and flexibility that, others don't.
What do you see the mortgage loan volume of the bank being in the next 2 years? I mean, this year I